Good afternoon. Welcome to Option Standards Thursday, October 24th, 2024. Welcome, everybody. Welcome, traders. We are doing this intraday about 3:15 p.m. Eastern Standard Time. If you're interested in getting these videos intraday, consider becoming a YouTube member, 99 cents. If not, you get the video by 4 p.m. anyway. So, thank you, everybody, for all the support. We're just going to go real quick with some maintenance, go around the horn. We're going to rush through this one. It should be less than 10 minutes. I want to point out, first of all, I think we got our reversal in the bonds, so that should start affecting tech. But clearly, we can't see that effect with Tesla being so bullish today. But that should pour into, as the move happens, should pour into the other tech stocks. This catalyst here today was something that I was kind of prepared for. We talked about it yesterday. So there we go. We have SPY on the monthly time frame. We have 2000 top, 21 top, and 24 topping. We're still in a bullish position. We're ending this. We're in this ending diagonal right here. And we're just waiting for things to turn out. We could end a candle here if it wanted to end up as a doji, and then for November have a continuation to the downside. That would be viable options. So not much to say left on there. On the weekly time frame, again, rejecting off of the top of the channel there. We're still in a bullish position, but still have some room to go. Still got some work to do in order to start turning bearish. At this point, we don't have a crossover on the histogram. It's starting to fade a little bit. We'll see what happens, but you see all the negative divergence happening here. I explained in the past videos, we do this over and over and over. So if you're missing something, this is your brand new video for you. Check out yesterday's video. We have a lot of information on that one. It just kind of fades into this one here. So we have a time price relationship at the end of December. So we have plenty of time to look to see what happens with price action here. Do we get a bottom here? Do we already have a move and then we get a top here going into time and price? We don't know. So we'll keep an eye on that over time. On the daily time frame, we're looking at the bearish rising wedge. We broke down from it, back tested, and formed another wedge. So right now we're testing the bottom of that wedge. That also coincides with the 20-day moving average, which is our trend indicator. So this on the 65, we're already bearish, but the daily time frame, we're holding on just tightly with this 20 moving average was our trend indicator, and also this resistance zone that I labeled some time ago. I didn't think we were going to get above it, but we're starting to break down from it. We're holding right at that spot. We're underneath the 8 EMA, so our momentum, we don't have any momentum to the upside at this time, but technically the trend is still up. So if price action gets above this 8 EMA, and then there's a possibility that price can go and touch the top of the wedge one more time. Okay, make another divergence on the daily time frame. We have divergences on every time frame right now. So could that happen? Maybe. But right now we're pinched between the two moving averages. All right, so something we suspected, we came down to this area here. So that's also why we had a move off of there, because we had a wick save. A stick save on this trend line because of this consolidation zone. Okay. I really want to get to the 65, so I just want to show we hit a minor target up here at the 138. We're looking at time and price, maybe for a low here at yesterday we had a high. Today we might have a low, just kind of chopping back and forth at this point. Nothing really happening, but we can start to see things form, and I'll show you exactly what I'm talking about on the 65. Let me get rid of these, get those out of our way. So we should have something happening here on the 29th and 30th. We have a cluster here, so we'll see what where price is when that happens. Let's go down to the 65. And now we're going to go around the horn. So this is the important part of this video. again, that stick save right here got the options expected move in the top of that range here. So held above there, and we're kind of bouncing. We're getting a reaction off of it. What happens now is so we're looking at this. So yeah, we had this old trend line that we broke down from. Can we backtest there? Yes. Now, if it does happen that way, that's a big assumption that that this is one move in itself, which kind of looks like an ABC in my opinion, which does mean that could be a corrective move, and then we go higher. But we're going to take a look at the Qs, and to me, this looks more like a I know I said a little different yesterday. A 1, 2, 3, 4, 5 wave leading diagonal, or 1, 2, 3, 4, 5 wave into a wave 2, and then a 1, and we're getting the wave 2 right now. So where could these targets be? You saw that gap area right here on the other one. So we're looking at a possibility of getting into the gap at the deepest, about 786 here. So I have it labeled as 1, 2 here, and then an impulse 1, and we're looking for the end of wave 2. Now we had trouble at the 8 EMA on the daily time frame right here, so I went ahead and took off my hedges at that point. Now price action could be showing some sort of zigzag, which is typical for wave 2, and it's usually deeper. But seeing that we're on a, we have our kind of larger degree, wave 1 and 2, and then a lesser degree, 1 and 2, a lot of times those start to get more shallow, the corrections, okay? And that's because they're starting to fade with the moving averages, okay? So that's why I didn't want to keep price action. I didn't want to keep the hedges and all these things. We're already starting to change momentum, and I'm not worried about it. I have most of my things out in time, out into January, December, into November, a lot of them in November, a lot of puts. So the deepest I could see this happening is the 786. I'm just not sure we're going to get there, and I'll show you on the Qs. Now, so far we have this target, by the way. I moved, if this is a 1, 2, let's say we get up to the 62% retracement, which is pretty typical, which means we have to get a little bit more bullish here. Then our target would be this 564 down there. So that's where for the members who are getting all of those November puts that I had in there in SPY and Qs, they're some big contracts. So I got those numbers off of these targets. So if we start to see price action get over the 786 here, it's just not likely that this is a 1, 2, or perhaps not even a 1, 2, 1, 2. This would be a corrective A, B, C, and you should see new highs with that. Okay, so that's that bullish point of view. I'm not in that camp. So we're starting to fade. We have lower highs here when the market made a higher high right here. So even tech's starting to diverge. I know it feels strong today, but that's just because of Tesla. We'll see what happens if we start to sell off into tech next week. But this is our all-time high. This is our high here, and I don't think we're going to reach that high. But it's still a slight possibility in my mind that this is an ABC move here, and we get one more new high, which is still that's in the micro term, that's still quite a big move. So we'll see what happens, and it's still a lower high from the high here, and it's considered a double top. But what I think is really happening is that going into next week, could even have a bearish Friday. So we'll see how Friday is. We'll probably have a Friday should set the tone on what's happening next. If we have a bearish Friday with durable goods before the bell, then we are likely to continue that into Monday and maybe get a bounce into Monday, or get into Tuesday, turn on Tuesday. So here's what this looks like. I think the top is in, and what we're looking at in this situation, it's a lot more clear, is a 1, 2, and then a 1-2. Now we're almost at that 62% retracement. We're just about to tag it. And so in my mind, this is just about complete. Can we go back and test up here a little bit deeper, 786, while maybe SPY tags the 62%? Sure. Now, again, so this is so far a 3-wave move. So we need to break this high up here in order to get higher. I know that's Captain Obvious, but this would be a zigzag, it looks like, 5-3-5. So with these being 5s, it's just going to look the same. A 1-2 and a 1-2 looks the same exact as a zigzag A, B, C. All right, so there's no way of telling other than we're just layered with divergences that this can't continue to go higher, or that we stop right here going to tomorrow, probably gap down and go lower. Okay, so this is a very sharp move here. So I think that this is the first initial impulse move. We get a retracement, and then it's starting to get sharper here. And this one should be the most aggressive move. Now we have with this, we have the top of this wave to the bottom measured out to the 62% retracement. If we go higher, we'll have to adjust it. But our target going into Friday and Monday, if we start to break down our wave 3 on this degree, not this degree, our wave 3 from this 1-2, I should put it in there, but and then wave 3, and then a 4 and a 5 should start playing out into the 473 area. So that's where I get those numbers, where I put those, where those puts are in. And we should still go lower after that, because that is not even this yellow degree wave 3. Okay, that would be a 1, 2, 3 down to this target, some bounce, and then we get this 3 a little bit lower. Okay, and then this 4 can come up and mess around with this area here, and then we'll get a lower 5 after that. Okay, so that's what I think is happening. If we start to get above this 494.50, that's a good caution sign that that's I'll even put the 786 in there just in case, but that'd be a good caution getting above here. That price is probably it's probably going to go higher at that point. I can't say otherwise, even though I know myself I'll hold the puts until we get over this high, but I know that people get nervous, and I got to explain what is happening so with their money. All right, so I think we're getting a lower high right now, and we continue tomorrow. IWM starting to get that bounce off that support area. I had somebody mention in the video yesterday that I was wrong about the bonds and small caps starting to take over, and I said, my God, like I wasn't calling a specific like trade right, yesterday on the dot. It's going to turn around. What happens is that the move in the bonds start to influence what the market does. And so that influence isn't quite there yet. It really has to happen. But I do think that we got our reversal in those bonds. So we have we're probably going to get a lower high again here with small caps, but I think this should start to take over a little bit into Friday. And it might even help hold the market up a little bit going into tomorrow. I'm not sure, but ultimately this could be a 1-2 and then a wave 3, and we're just getting wave 4, and this continues to go lower too. So with the market being so bearish, in my opinion, then I wouldn't rely on any upside here. I took off the hedges because it just wasn't working. I took them off over in this move here, and they just weren't helping. So it doesn't have to. So SMH, and we'll get out of here, and the VIX. And so SMH just weak. It does look like it wants to go with some sort of impulse move here in an A, B, C, or this could just be a running flat. So this could be an impulse wave here, and then we get an A, B, and then a lower high C, and then we continue down. Okay, so that'd be a 1, 2, and then moving lower. This could be a 1, 2, 1, 2 as well. Again, so if you want to make them count just like the Qs and SPY, then that would be the case. VIX. So the VIX is, had its back test to the inverse head and shoulder, and now is building some market structure to the upside. We had a breakout from this channel here, and then kind of a gap, almost like a fake break. You can adjust things. It's just so volatile that it spiked through here, but it's holding the 19, and so we might just be getting, again, stopping here and then getting our move starting tomorrow. If we start to break down lower than 19 and not just a spike through, and start closing these gaps, and it's likely that the market is going higher and reaching those new all-time highs. So we'll see. This really has to break down underneath these lows here, in my opinion, but we'll see what happens there. Again, I'm holding short all the way. So Qs, it looks like we're touching that 62% retracement. So I might add some more puts going into maybe even a lot on tomorrow. I got a lot going on. So somebody was wondering why I had so many calls to hedge going into today, and it's because I'm loaded to the downside. So I put my money where my mouth is. Okay, thanks for all the support, you guys. Don't forget to subscribe and like this video. We'll talk to you tomorrow.